Hi everybody, this is Ospreyeye from mychartcoach.com, and we're going to take another look at ticker symbol PULM. Okay, this was a really nice follow through today. Currently up 49% and dropping. It did start dropping. We'll talk about that in just a second. But first, I want to discuss what error I made yesterday. Okay, so I made the video and we looked at this daily chart, and then we also looked at the weekly chart here, and I even discussed here the direct offering. As you can see here, the company is selling 2 million shares at $2.50 a share, and the start of the closing of the offering was supposed to take place potentially today, and it looks like maybe that has already started with this pullback from high of day. So that's something to keep in mind. Look at their price, 250. Currently, the share price is up above $5. So I showed you all that yesterday, but what I didn't show you, and which I always plan on showing, which I usually try to show in my videos, is the 15-minute chart. You always need to look at the intraday chart as well, and so it's not just about the daily and the weekly chart, but it's about, well, what does that intraday chart look like? What is this telling you? And so yesterday into the close, if you notice, the close was above, the candles closed above the middle Bollinger Band. This candle here is yesterday's close. Notice that the candles were above the middle Bollinger Band. They were still holding EMA 13 support. The 15-minute chart was still bullish into the close yesterday, so that was signaling more upside potential. And our strategy is, if the 15-minute chart is bullish, then continue to hold. If it broke down, and if you look up here how it's starting to break the middle Bollinger Band, this is your red flag here that the chart is breaking down. If you did not take profits up here at the high of day, and see this double top, then you really wanted to be out once this middle Bollinger Band broke. Now the share price is hitting the 540s. It's much lower. The next target is going to be this 50 moving average, simple moving average down here. It's rising, but this green line here, it's currently around 4, is going to be the next support level. So you could see a big drop here down to 4. If the middle Bollinger Band turns into resistance, that's going to signal downside risk and a potential start of a downtrend. So basically, the chart was saying that this would have been a good overnight swing trade. I got shook out from the direct offering. It just so when that happens, what you want to do the next day is you want to look to see, is the stock still in play the next day. And if you look at the first candle of the day, you will notice that the first candle here was very bullish. And so this was your sign, if you took profits into the day yesterday, to re-enter at the start of the day. And so the key was to jump back on board at the start for the ride up. And then you notice it had this really nice run up to $7, and then it hit 7, and that's where it topped out. And so if you look up here, just below 7, you'll see that there was a double top was created today. And so notice here there was this white candle followed by a red candle. This was your, whenever you get a big run, and then there's the first red candle. We always look at the first half hour to 1 hour in the trading day mark. That's when most traders take profits on the morning spike, and so that's when you always want to look in to capture gains. And so when you see that first red candle forming, that's your signal to lock in the top. And so basically, it pulled back and then it bounced off EMA 4, and then you can see here another the exact same pattern formed, and it formed a double top at the same level. And so this double top right here was telling you that this was signaling downside risk. And so if you didn't get out here, and then it pulled back up, and then you saw another red candle right there, that was your second opportunity. You had 2 chances to get out near $7. And so if you didn't take profits there, then this down here was your signal. Okay, man, I better lock it in, because remember, this is going on. This is the direct offering. So that means these guys paid $2.50. If they're selling up here at $5.20, if they're selling above $5, they're still doubling their money. And then you also have to remember that financiers, most of the time, I'm not positive about this with PULM, but most of the time when the financier will short the stock, and so they make double the money, because they know that when they start dumping shares, that it's going to drop. So not only are they making money off the run up, and selling their shares for twice the amount of money that they got them for, but they're also making money on the way down. And so that's something to always keep in mind. There's always downward pressure in a direct offering. Okay, so that's just that's just the golden rule. And so the whole point of the video today is to tell you that you never know how high they're going to run it, because you got to remember that because the dump is coming, and so this is a pump and dump. And so I'm not saying this is a bad company. I'm just saying that's how this is played out. And so they're pumping it up as high as they can. I mean, look at all the PRs that came out. There was a bunch of PR. There was even one that came out yesterday that somebody was saying that there was no dilution when there was a $2.5 million direct, or a $5 million direct offering that was taking place right now. So there was some kind of scandalous misinformation that was put out there to try to trick investors into sticking with this. And so it's cool to trade this, but just know that if you hang on and you chased it, that you could be underwater quickly. And so there's a lot of good news behind the story. The stock could totally recover and keep heading higher. It's got a very strong uptrend. Let's look at the daily chart here. And so notice the candles are riding EMA's 4 and 8 support higher. We really like this chart. If the chart's not broken, don't fix it. Just keep riding as long as the uptrend's intact. If there is a pullback, EMA 4 at 397 will be the first support level. And then look at this 300-day simple moving average is the big level to hold if there is a dip. You would like to see EMA 4 hold for a continued push higher. You never know how this is going to play out. It could continue going higher. This is just from past history, this is how it usually plays out. Usually there's downward pressure and it pulls back. And so another thing to look at is the volume. Notice how there's a big volume spike today. This is what we call a climax spike many times. So I mean, there could be another green day tomorrow and even more volume, but I doubt it. So many times what happens is the sellers that in a direct offering will sell at the top, and notice this long upper wick to 7. They're trying to dump at the top. And so if you look here at the big volume bars down here, you could see, I mean, there was big money early on, and so a lot of people loaded, but look at how all the volume was early in the day. And so yeah, so it's just something to keep in mind. If the pullback does happen, and the candles do hold support, then the uptrend can continue. MACD is getting steep here. You've got what happened with the pullback with the upper wick. Is it corrected fasto? So fasto was at overbought levels, and now it pulled back. So there's actually more juice in the tank here, as we like to say. It's not above 80, so that's good. It's all going to depend now on what happens with the dilution and how that plays out on the share selling. So watch this 15-minute chart. So what we do now, if the candles go below the middle Bollinger Band, now we wait for a break back above the middle Bollinger Band. It's going to be the break back above the middle Bollinger Band that'll signal for us that PULM is back in play. If candles are forming below the middle Bollinger Band, we're just on the sidelines waiting. And so we're just going to wait for this chart to heat back up. We're not leaving the trade. We're not taking our eye off the prize, but we're going to have to go to the sidelines here and wait for another entry point. And if you look here at what's happening on the weekly chart, you will see that there was this multi-week run with a huge climax this week. And notice that there's this push above the 100-week moving average at 420. And then the important thing is this resistance level back here. Notice that it's hitting this 550 resistance. That level is going to be tough to break. If it fails to close above that for the week, you want to see this hold this 100-week moving average at 420. And if it pulls back below 420 to end the week, that'll be a red flag that the 100-week moving average could turn into resistance. And then you notice it's going to be a close well above the upper Bollinger Band if it does close at these elevated levels, and that could signal next week the candles pulling back into the bands. This is once again a very strong uptrend. As long as the uptrend continues, this is a good swing trade. We just once again we need to see how it plays out with the direct offering, and then if you look here, that RSI is at overbought levels, and Fasto did correct. Okay, well, thank you for viewing this chart. I hope the information helps. And if you would like to learn more information about charts and technical analysis, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.